Good morning, trading world. It is December 6th, right at 7 a.m. Um, Coming in, looking at the market, looks like we're going to pick up where we left off. Sell, sell, sell. Um, but I am kind of at tug of war with myself on whether I want to take a position because I don't want to catch a falling knife. Um, And if you're not familiar with that terminology, it just means basically getting in on a fall uh, right at the end where you get in and it basically takes off in the other direction. So you basically get in, it's a suicide. You cut yourself. So let's take a look. Uh, Probably going to take a look at the broader market because the position that I'm thinking about is in the SPY. Um, Still looking at being bearish in the SPY. Before I do that, let me go into a broader look. I know this probably just looks like spaghetti all over, but I usually use this view as a broader look. This is basically the major uh, the major indices in the S&P 500 with a couple more things that kind of help me take a look at things. Um, and just at a glance, the more things that are at the lower right side of the chart means the worse the market is. With the exception of this bottom row, the bottom row if all of these things are up at tops, it's even bad. It's even worse. But the utilities, the utilities are right at highs, which is bad. It's considered a defensive stock, so these are places where people run to when everything is bad. So when these are up, these three utilities, healthcare, staples, consumer staples, it is bad. Utilities is up near highs, but everything else, eh, it's lower right, which means the market is in bad shape right now. Let's go back and bring up the SPY where I'll be looking to take a position. Get those out of the way. All right. Um, I would definitely like to jump back in on the SPY. Um, I am bearish. However, we are about at the end of our rope. I'm looking at maybe, maybe a little more room to run down to this 261, 262 area or 261 something. We may be able to run there. But there's no need for me to jump in unless we can get some kind of bounce at the open. If we can get a bounce at the open back up to this 268, 269, and possibly 271, if we can get a bounce back to one or two, one of those areas, that would be a safe place for me to jump back in. Otherwise, because I am looking at what might possibly be um, divergence. It hasn't formed completely yet, But if we put in a low here and then we come back and get lower, and the MACD doesn't make a lower low, it may be a time for me to actually get long. I may go out and try to find a cheap call, um, a cheap out of the money call, just to see if we can capitalize on a little bit of the bounce here. Because we fell quite a long way, and so usually after a solid fall like that, should be a bounce of some sort. So that's pretty much what I am thinking right now. Um, I'll be looking for a way to get in, but I do not want to get in here at the lows. That is a no-no. Um, if I do, if everything opens up crazy and everything is super negative and we can't get, if we get just a little bit of a bounce, um, especially, I mean, it looks like at best it might be 266, but I mean, we're definitely going to get some type of bounce this morning, but whether it'll be enough for me to get in. Um, Because if it's only to this 266, 267 area, I'm 50-50 on whether to chance it or not. But if we can get to 269, that would be a great place to try to enter somewhere between right around right at 269. That would be a good place to try to enter and see how much further we can ride down, because we may actually go to this 261. So that's what I'm thinking about for the day. Um, we got a lot of negative news between the U.S. and China. Um, the CEO of Huawei was arrested and being extradited to the U.S. Was arrested in Canada. So that is going to make negotiations or the look, the outlook on further negotiations between U.S. and China strained. So that's going to be a bit of a bad news. And also, crude oil has also taken a tumble with um, the OPEC. What is it? Saudi trying to, oh, Qatar trying to leave the OPEC. Um, and with that meeting coming up. So we got plenty of news to fuel the sell off, um, which in the overall picture, we got a long way to go in this sell off, because we're going to go back and test the lows here at 262, maybe 259. So we got a ways to go, and I do believe this is where we'll eventually wind up, somewhere around this 262. But I just don't want to catch a falling knife. Hopefully, at the opening, we can have some type of pop to get us back up toward 269. And that I'll definitely be trying to look for uh, and try to get some type of entry and continue to ride the wave down. But this coming off, I'm not too big, not in too big of a rush to enter coming off of what I did on Tuesday. Tuesday, I pretty much had a 68% return on what I risked. So that was a very good day when it comes to options, especially short-term position I took on Monday, which I pretty much took up here. The entry was here, right at 277, and it went back against me a couple times. But what I had been looking for happened all along, which so. Um, and the sad part, I got out early because I was leaving the desk. Um, but I got out way too early, and I still got close to a 70% return. So I missed pretty much half the ride. So usually after a good day, you usually go turtle mode. You never want to give back what you just made. So that's the other reason I may be sitting on my hands today. But that's it. That's the pre-market outlook for December 6th. I'm hoping everybody else sees a profit today and have a good trade. See you next time.